The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to Squawk Box Europe. I'm Steve Sedgwick with Karen Cho, and these are your headlines. President Trump leaves the G7 summit early, reportedly heading straight to the Situation Room after urging residents in Tehran to evacuate and saying his return is about something much bigger than a ceasefire. Well, the UK and the United States have formally signed their trade deal with British car makers and aerospace, set to reap most of the benefits, but steel and aluminium tariffs remain in place for now.
Shell CEO Wael Sawan tells CNBC exclusively the oil giant is on high alert amid the conflict in the Middle East and that it is working to guarantee continued energy production and delivery.
Our biggest focus right now, to be honest, is safety. It's the safety of our people in the region. It is making sure that assets are protected. Of course, Shell has a significant footprint, both in terms of operated assets, but also shipping.
Huge amount of news, massive amount of guests. What more would you possibly want from this show as well? So, President Trump has left the G7 leaders meeting a day early, a day ahead of schedule, with the White House citing the ongoing conflict in the Middle East. Israel and Iran have exchanged strikes for a fifth day, with the IDF claiming it has achieved full aerial superiority over Tehran. The US leader has requested that the National Security Council be prepared in the Situation Room, according to NBC News. Speaking in Kananaskis, Canada, Trump said he hoped Iran would put pen to paper on a deal.
I'm in constant touch, and as I've been saying, I think a deal will be signed or something will happen, but a deal will be signed. And I think Iran is foolish not to sign one.
President, Iran is accusing Netanyahu of attacking them to deliberately derail your nuclear plan that you had. What do you say to that? Do you think that's
true?
No.
Look, Iran should have signed the deal.
If it would help bring Iran to the negotiating table, would you guarantee that the U.S. would not get involved militarily?
Well, I think Iran basically is at the negotiating table. They want to make a deal. And as soon as I leave here, we're going to be doing something. But I have to leave here. I have, this commitment. I have a lot of commitments. I have a commitment to a lot of countries, including the UK, where we just signed our deal.
Well, the president called for a mass evacuation of Tehran as Israel and Iran continue to exchange strikes. The US leader took to his Truth Social platform to repeat his call for Iran not to have a nuclear weapon and said everyone should leave the country's capital. Let's take a look at where the oil price is currently trading. It's stabilized in the previous session, and to be honest, it's found a level where it seems pretty comfortable with at the moment, with WTI trading at $72 and Brent trading at $73.50. This, of course, after the 13% rally we saw in both products last week.
In the meantime, G7 leaders issued a surprise joint statement before Trump left the summit, accusing Iran of being the principal source of terror and instability in the region. The US had previously indicated it would not sign up to the statement, citing differences with other G7 leaders. It goes on to state that Iran could never have a nuclear weapon, while outlining hopes for a broader de-escalation of hostilities in the Middle East, including a ceasefire in Gaza. President Trump has rejected suggestions his return to Washington is due to an impending ceasefire between Israel and Iran. In a post on his Truth Social platform, Trump hit out at French President Emmanuel Macron's claim it was to work on a ceasefire, saying Macron was mistaken. The US leader said his departure from the G7 was for something much bigger than that, adding Emmanuel always gets it wrong.
Oh, I'm sure Mr. Macron loved that. OK, the volatility in crude markets has been top of the mind for investors and executives at Energy Asia Conference. And JP now joins us from Kuala Lumpur with one of the biggest and most important players in the whole industry, JP.
Absolutely, Stephen. Good morning to you guys out there in London. The conversations we've been having on the sidelines of the Energy Asia Summit here in Kuala Lumpur, Malaysia, have been quite fascinating. And of course, also dominated mostly by the events of the last 5 days, the surprise preemptive strike of Israel and Iran that's really made itself felt and was reverberated across energy, oil prices. And that's also raised front of queue, at least in terms of importance right now, is whether or not energy is secure and how that's also influencing the planning and the outlook of many of the business leaders and executives here on the sidelines of Energy Asia with regards to how they're actually approaching the business and whether or not this is posing issues, at least for some of their personnel and assets in this region. And as you mentioned, they don't get bigger than this, actually. We are joined today on the sidelines of the Energy Asia Summit by TotalEnergies CEO Patrick Pouyanné to talk about how this is impacting their business and also how they're actually foraying more into Asia and Asia's role in the overall strategy of TotalEnergies. Mr. Pouyanné, thank you so much for joining us. I want to talk about what TotalEnergies has been up to in this region. But first, because of how important it is, I do want to get your thoughts on what's happened over the last 5 days. Many of your peers in the oil and gas sector have actually said that it's been quite hectic for them, actually. Is it similar right now for TotalEnergies? And how are you viewing these concerning events that seem to be getting worse especially when you're talking about the conflict between Israel and Iran right now?
I mean, I will not comment the decision of Israel to attack Iran. What it shows is that this region is very important for the oil and gas markets because 20% of the oil exports come from this region and 20% of the LNG is coming from Qatar. So, it's so of course any events which could affect oil and gas installations in the region would affect the global markets. TotalEnergies, we are involved heavily. We are the largest international oil companies in the region. We were born 100 years ago in Iraq, and we still have operations in Iraq, Abu Dhabi, Qatar, and Saudi Arabia. Of course, for the CEO, the first concern is the security of our people. So since Saturday morning, we have, of course, taken care of our people. They are safe today. We are controlled. We have people in Iraq, in the south of Iraq, which is, of course, not far from Iran. And it's also people, but in all the region, because, and I hope it will not be the case, that the attacks will not concern, I would say, oil and gas installations, because this could become a real dramatic hit, not only in terms of safety and hazards and risks, but also in terms of impacts on the global markets. So, of course, we are not in control. We monitor that as much as we can on our level, and we follow that very carefully. I would say at this stage, when you look to the markets are relatively quiet. I mean, the oil price went up to $75, not yet at 80 like the year before. So that means that people still consider that I would say the conflict is there. It's a new step in the conflict, but it's still somewhere measured in the way it's happened. We'll see what could be the development.
Right. This reminds me of 3 years ago when the Russia-Ukraine invasion started. Actually, a lot of questions were raised about whether or not energy systems and infrastructures are indeed secure. And do you think that the same questions can be raised about the state and the fragility or lack thereof of energy security right now?
It is the same, again, if you remember well, by that time the oil markets were not really impacted. It was because quickly, even if you have to redirect some flows and tankers because Europe does not buy any more Russian oil. But globally the market remained almost intact. On the gas side, on the contrary, the LNG price went to the roof because suddenly Europe were starved of Russian gas, was obliged to buy a lot of LNG. And that has been done, by the way, at the expense of Asian countries, and the price went to the roof. So all that, it has been stabilized because the infrastructures have been built. And so again, we are today, I would say, gas price remain quite high, but reasonable. So, if suddenly we have a strong event, I don't know if a big installation in Saudi Arabia or in Abu Dhabi or in Qatar is affected by some strikes, then you could see immediately some impacts on the markets. That's why I think it's more reasonable to try to avoid these energy installations in this conflict. But the target is not the energy installations. The target are more the nuclear installation from Iran, from Israel.
And but the concern also is that if these attacks actually perhaps compromise some of these energy installations and infrastructures, it could pose problems. And again, it shows just how volatile things have been, because before the attack, there was a question about slumping demand in oil. And now it seems we're on the other side of the coin at the moment. Yeah. How are you making, I know that dealing with price volatility is important.
The oil market, it's 100 million barrels per day.
Yeah.
If you move 1 million is a lot. Yeah. If you move 1 million, immediately the market, and suddenly, if it's sudden, 1 million barrels per day will impact your market. So we speak there potentially of much more than that. So that's why the markets are nervous, because again, if the Strait of Hormuz was closed, which we are far from that today, it could affect 20% of the global export market. So that obviously would have an impact on the market. So the markets are, yes, there is a debate about is it demand is slowing down because of the macro is not too good, but you have also good supply, so it's going, the markets were bearish. But again, if you have a disruption, immediately you react in the other way. That's part of the difficulty for trading. Trading is not an easy job today.
Absolutely, and dealing with price volatility seems to be front of mind and the first requirement for CEOs in the oil and gas space like yourself. I want to talk about
CEOs in the oil industry. Our job is not to control volatility. Our job is to lower the break-even. Total Energies is $25 per barrel. So of course I prefer high price, but my job is to have a profitable company, I would say, in most of the environments. That's what we are working for.
I stand corrected then. I do want to pivot now to Total's presence here in Asia, because you did make an announcement that you are increasing your foray, at least in operations in Malaysia, by acquiring bigger stakes in the gas assets. Why now, and why is this important for Total in this day and age?
In fact, Asia for us, it's a big market. You know, it's the growth in gas, the growth in oil is coming from Asia. It was China, India, and Southeast Asia, ASEAN countries are where the economy is growing quicker. Gas is very important in that region because it's an alternative to coal. So we strongly believe that there is most of the LNG demand is coming from Japan, Korea, Taiwan, Vietnam tomorrow, India, etc. So being in Asia is important. It's true that you don't have a lot of natural resource. We were historically in other countries, Indonesia, Thailand, and we decided, because of importance of Asia, we had the opportunity in 24 to come back in Malaysia, to establish ourselves in Malaysia. Malaysia is a stable, I would say, offers a good, stable framework from an economic point of view, a very prolific basin in terms of natural resource and gas in particular. So we acquired some assets last year from Sapura OMV, and I'm very pleased because I came for the first time in Malaysia as a CEO in 23. We acquired these assets in 24, and this year in 25 we have announced a big, I would say, a strategic partnership with Petronas, where we will acquire again a number of blocks, including some new gas resource to be developed, and again some exploration as well, which is important. The region for us, Total Energies is the third largest LNG company in the world. Of course, it's LNG because we strongly believe in gas, in LNG, and we see again these Asian markets as the core of our strategy from this perspective.
And just to double down also, because you're one of the few oil and gas companies that are still sticking to your commitments to shift away from hydrocarbons to electrons, but you've mentioned that the decarbonization has to be done gradually. How gradual do you think that has to be given the state of things right now?
The customer will decide.
Okay.
You know, it's the customer. The transition will go with customers. In fact, we are not shifting away. We have two pillars. One is oil and gas, and we bet a lot on gas. Today, we were 10 years ago 50% oil, 30% gas. Today, we are 40-40. And what we want to add on it, it's electricity. In fact, the other strategic decision from in 2020, when Total became Total Energies, is to add to produce electrons on the top of oil and gas. Why? Because electricity is the energy of the 21st century. We speak about AI, data centers, you need more electricity. You speak about EVs, it's electricity. You speak about decarbonization, it's electrifying the process. So we strongly believe in the growth of electricity. I don't know at which pace it will replace oil and gas. What is clear is that oil and gas today have a limited growth. It continues to grow because the population is growing, in particular in Asia. But so we have two pillars in the strategy. We continue to deliver to customers the energy of today because oil and gas is affordable, and we are investing a lot in electricity. And in fact, in 2025, electrons will represent more than 10% of our sales and production. So we are becoming, will be an oil and gas and electricity company. And it's, I would say the strategy is the energy of today that you use every day, and the energy of tomorrow, which will be more and more electricity. This is what we want to do. And so it's not only climate change, it's just, in fact, the trend, which is linked to evolution of the demand. Again, electrification of the use will be the big trend of the 21st century. And I just spoke about AI. We need more data centers. All that is much more electricity.
Right, and it's all part of the plan to make sure you stay ahead of the curve with regards to this strategy and the evolution, the trend towards electrification, sir.
In energy, it's long-term business, so you need to keep your strategy to be consistent. There is no way for me, otherwise we already invested in the last 5 years more than $20 billion. So we are building a real big business. The objective is that these electrons will represent 20% by 2030 of our energy mix. Again, it's not just shifting away, it's together, because I strongly believe, you know, the planet needs more energy, and we are there to deliver more energy, but with less emissions. And this is a mission, more energy, less emissions. If we manage that, the future of Total Energies will be long, in particular in Asia, which is again at the core of our strategy.
Fascinating insights. Patrick Pouyanné, CEO of Total Energies. Thank you so much for taking some time to speak to us on Squawk Box in Europe today on CNBC International. I'll throw it back to you guys in London, but we have more conversation on the sidelines of Energy Asia with other leaders like Patrick Pouyanné. But for now, it's back to you guys, and good morning, Stephen Karen.
There are no other leaders like Patrick Pouyanné. He's a one-off, JP. Please give him my regards. It's always good to see such a fantastic interview between CNBC and the boss of Total. Thank you very much indeed for that. JP also had another brilliant interview with the CEO of Shell, Wael Sawan, who said the oil giant is closely monitoring developments in the Middle East.
The last 96 hours have been very concerning, as you say, both for the region, but more broadly in terms of where the global energy system is going, given the uncertainty and the backdrop that we see right now and the geopolitical volatility that we see. Our biggest focus right now, to be honest, is safety. It's the safety of our people in the region. It is making sure that assets are protected. Of course, Shell has a significant footprint, both in terms of operated assets, but also shipping. And how we navigate over the coming days and weeks the situation is something that is particularly top of mind for myself and the leadership team. We're also looking at how we can continue to support our customers to make sure that they get the energy that they expect at times like this. And so we focus very much on what we can control, and what we control right now is to leverage the diversified nature of our energy company to be able to deliver to customers west, east, or even in the region itself, and to make sure that we uphold our commitments.
Right, and your operations, because Shell does have significant operations in the Middle East and across the Gulf region. Can you update us as to whether or not most of your personnel and most of your assets are indeed secure at the moment, and can be so for at least the near future?
We very much continue to monitor the escalating situation, as you say. As to where we stand right now, we continue to be confident in the safety of our people and the assets. And of course, we are in very close contact with governments across the regions in the places where we operate. I think for avoidance of that, we don't operate in either Iran or Israel, but it is within that region itself where we are worried just about how the escalation might result in new elements that we hadn't considered. So the team, our security teams, are very much in touch with the assets and continuing to make sure that people are ready to be able to take the necessary actions at the right points in time.
Coming up on the show, the UK and US confirmed their trade deal before Trump's premature exit from the G7 summit in Canada. Plus, geopolitics loom large over the Paris Air Show after Israeli firms refused to remove attack weapons from display. And oil is in focus in a dramatic week for energy markets. We'll discuss with the Enquest CEO Amjad Bseisu this hour. And let's take stock of the market action yesterday. Investors, traders closely watching every tweet, every post, every comment on where we're at with the Israel-Iran fighting. And comments around a ceasefire were enough to encourage the market to pull back on the oil trade and to drive equities north. Of course, there's been some testing of exactly what is taking place behind the scenes, even just in recent hours from the president. But in the trading session yesterday, very instrumental for what we saw in terms of that green returning to markets. Goldman Sachs, big moving stock for the Dow, second pulse of session high for the Dow. For the Nasdaq, for the S&P 500, Nvidia, big moving name, and you can see both on the front foot. In fact, it was the ARK Innovation Fund, one of the big drivers in the session. If you looked at quarters of the market, a pop of roughly to the tune of 4.4%. I want to take you to the Asian markets in session today, picking up on that green from Wall Street. It is more of a mixed bag. We're still seeing support for Japanese names and also South Korea. These were the big movers in the Asian market yesterday, but some fatigue coming back into that Hong Kong and Chinese trade. Don't forget the data giving us a mixed picture about the factory side at this point from the Chinese economy. I want to take you to European futures as we get set up for the trading session. This is how we are perched. It looks as though we're settling in for a weaker start this morning. The signal suggesting a pullback on the FTSE to the French market. Yesterday, we were actually on a stronger foothold as we bounced across on the major charts. So a reversal from that green trade. Well, US futures, this is what we're getting from that stateside signal. And you can see it does also look like it'll be a cooler day of trade in the United States.
The Trump administration is reportedly considering an executive order to open the $9 trillion US pension market, yes, you guessed it, to private equity. This, according to Financial Times. Our next guest is a proponent of this, saying that a blend of public and private markets will redefine retirement investing. Let's dig into the weeds on this one. Kamal Bhatia is the CEO of Principal Asset Management. Kamal, lovely to see you.
Good to see you, Steve.
What am I? Am I the only man out there in the whole of the world of finance who is really concerned about this obsession with private markets now? It's become, private markets have been around for longer than in fact, longer than stock markets.
That's true.
And yet, all of a sudden, 2025, everyone's calling private markets the buzzword.
Yeah.
I'm sorry, there are very good reasons why people haven't overly invested in private markets for decades or centuries as well, and it's been left to the experts as well. Yeah. Why all of a sudden should we be excited about private markets? Good morning to you, sir.
Good morning. Good morning. Great to be here with you, Steve. So first, I think you're absolutely right. Private markets have existed longer than public markets for a long time. I think the reason there is so much interest in them is they have become bigger and bigger part of the investing universe. You know, and I think if you really think about the two big trends around the world, one is there is a lot of capital that could sustain you for being a private company longer and longer and longer.
Yeah, decacorns, centicorns, we've heard all about them,
Well, not just that. It historically was really about equity, and we all know about private equity. But over time, the private debt markets have grown substantially. And as the banks exited, private investing has only gone up over a period of time. One of the areas, it's all talk in Europe now, is infrastructure. You know, infrastructure investing was largely a government enterprise of investing, and now...
Oh, yes and no.
Yeah.
There's a lovely acronym out there. PPE, you know, kind of private, a big one, PPP, private-public partnerships as well. So the tortuous path of private sector investment getting involved in public sector infrastructure projects, you know way better than I will ever know. Cost overruns on defence projects, cost overruns on bridges to nowhere, cost overruns on hospitals, cost overrun on tunnels, on stadia. This is not necessarily a great place for private equity to find a safe home for your pension retirees.
That is absolutely true. I do think that there is a component of public-private investing which actually makes sense. Let's talk about the big topic these days, which is energy and energy transformation around the world. It's a topic when you look at infrastructure investing, AI data centers being one extent of it, and on the other side, what you need in terms of energy transformation around the world, what I would call responsible energy sources. That has to come through public-private investing. And to us, the more interesting place to play is the debt side of that. To your point, there are cost overruns in a lot of projects, and you have to be disciplined about it. But I think the space has expanded. And to your original question, why is it in vogue these days? There's a little bit of marketing, so let's keep that aside.
Little bit of marketing. Come on. We're all grown-ups in the room here. Little bit of marketing.
A ton of marketing. I spoke to a fundraiser the other day in the private market who was telling me, look, there's been a real problem getting to exit. So a lot of the players that would typically be out there investing in new projects simply can't because they don't have readily available cash. So the reality is other players, opportunistic players, are coming into the market to fill that gap. That's what we're talking about.
That is true, Karen. And I think there is demand. That's why capital's coming in. To your original point on why our pensions or retirement, which is where our big thing is, we are one of the biggest players in retirement investing around the world. And we have historically been a big real estate investor. And that area continues to be probably the place where there is value in investing in the pension businesses.
Let's talk about the value. I've spent a lot of time in recent weeks talking about data centers for AI.
Yes.
And the reality is we're going to need them.
Yes.
We don't know what type of data center we're going to need, which one's going to be better than the one next to it based on the use of energy, whether it is more efficient, the way it's run, the way it's constructed.
Yes.
And the reality is the investor doesn't know either.
Yes.
So what are they plowing money into, and will that actually deliver any return, or are we going to be talking about a big glut of data centers that are not going to be useful?
I think it's a great question. So one, you have to be discerning. I think there is a lot of momentum on the data center AI side, but I would say AI, while there's a lot of talk of it, it does take time to build these properties. The cost of building them only goes up over time. A component of data center that isn't talked about is cloud computing. Everybody outsources their data needs today, and you don't necessarily just have to be AI to participate in that market.
So we spoke to a guest yesterday. I've been dying to ask this question. He said, look, the AI build-out is going to be very positive for business, for consumers, but not necessarily investors, and likened it to the railroads, too much CapEx investment. And the reality is the CapEx investment is happening at the hyperscaler level, and what you're talking about in private markets, that's the CapEx side.
Yes.
For a lot of businesses, it's OpEx.
Yes.
It's because it's a service. It's a subscription service these days.
Yes.
So they're not having to build out this technology like they did previously with all these servers. Does that mean that down the track, what we're talking about here, this CapEx spending, that's going to be negative?
Well, so there are two issues you're raising. One is the CapEx spending so high and will ever be monetized to justify the IRRs? Look, only time will tell. Like in every cycle, overinvestment does happen, and you have to be rational. My view is you want to be in the right place of that value equation. As you highlighted, the OpEx side is not as high as the CapEx side, and over time they have to get into equilibrium. The place we see this cycle you want to participate in, you want to be someone who gets the toll out of that transformation. So our play has been is to be the provider of the real estate that will be used. Somebody else owns the machines and the chips, and there is a need on the OpEx side to monetize it. And it's a long tail transformation. So you are right, these things get out of disequilibrium, and you want to ensure you're in the right part of the value chain.
I've written down one word.
Yeah.
And it's tourists. I think you probably already know where I'm going on this one as well. There are so many areas where there's been fantastic returns for years, and then the tourists get involved because they think, oh, hang on a second, we're in the insurance market, when the financial players try to get into that, in the commodities market, I can see all over them. Private equity loves the fact that it outperforms equity. It loves the fact that it's got 11, 12, maybe that's 15% average returns over the lifetime of these projects as well. If the tourists start coming in and there's vast amounts more money coming into this sector, those returns are going to go down, aren't they?
They are. They're absolutely happening in what we have called traditional private equity. The large end of the space, buyouts in particular, will see that lower IRRs in that space. And you are absolutely right. There is a fundamental principle in investing. The more capital comes into an asset class, until the size of the asset class becomes bigger, returns have to come down. That is fundamental investing, and it is going to happen in portions of private equity.
Are you based stateside or over here?
I am based stateside.
Well, every time you come over, please come and talk to us.
Absolutely,
we
Steve.
love talking to you, and it's great to meet you.
Good to see you, Steve. Thank you,
Kamal,
Karen.
thank you very much. Kamal Bhatt here with us, CEO Principal Asset Management.